Imagine waking up one morning, checking your portfolio, and realizing that one of your small investments has exploded by over 200%. What was once just a few $100s is now worth thousands. That's the dream every investor chases, finding those rare, game-changing stocks before Wall Street fully catches on. So today, we're diving into two stocks that Wall Street believes can soar over 200%. Companies that have the potential to make you rich if you catch them before the big run. These are not hype-driven plays. These are real businesses with strong fundamentals, incredible technology, and the confidence of top Wall Street analysts behind them. So if you're serious about making money in the stock market, make sure to watch till the end and remember to subscribe and turn on notifications so you never miss an update on the hottest and most promising stocks in the market. First on our list is Adverum Biotechnologies, ticker symbol ADVM, a company with a market capitalization of around $94.6 million. Adverum Biotechnologies is a clinical-stage biotechnology firm focused on developing gene therapies for serious ocular illnesses. Their mission is simple yet powerful to help people retain their vision while minimizing or even eliminating the need for frequent treatments. Looking at its financial report, as of June 30th, 2025, Adverum reported cash equivalents, and short-term investments totaling $44.4 million, compared to $125.7 million at the end of 2024. While that represents a significant decrease, the company expects this cash runway to fund operations into the fourth quarter of 2025. This means the company has enough liquidity to continue its critical clinical trials without immediate financing concerns. For biotech investors, runway is everything running out of cash before reaching key milestones can be catastrophic, but Adverum seems well-positioned for now. Research and development expenses reached $37.1 million for the 3 months ended June 30th, 2025, compared to $17.1 million in the same period last year. This increase was mainly due to higher clinical trial expenses and personnel costs associated with the ongoing Artemis Phase 3 trial for Ixo-vec. Importantly, $1.1 million of this amount was stock-based compensation. These numbers tell a clear story. The company is in heavy development mode, pushing hard to advance its leading therapy through clinical stages. For biotech investors, that's exactly the kind of spending you want to see money going into R&D, where the value is created. General and administrative expenses, on the other hand, were $12.7 million for the quarter, down from $15.8 million in 2024. The reduction was primarily due to lower facilities expenses and reduced personnel-related costs. In other words, while R&D spending is up, Adverum is tightening its belt on non-essential overhead, a good sign of operational discipline. Stock-based compensation included in general and administrative expenses came to $1.3 million for the second quarter. The company's net loss for Q2 2025 came in at $49.2 million, or $2.34 per share, compared to a net loss of $30.5 million, or $1.46 per share, in the same period last year. While the losses widened, this isn't necessarily bad news for a biotech in Adverum's stage. The increased spending is tied directly to advancing their lead asset through Phase 3 trials, which, if successful, could create immense shareholder value. Biotech investing is a long game. Years of losses can precede massive gains once a product hits the market or secures regulatory approval. What really gets Wall Street analysts excited about Adverum is the upside potential. Based on recent analyst reports, 5 Wall Street analysts have issued 12-month price targets for Adverum Biotechnologies. The average price target sits at $15, with a high forecast of $30 and a low forecast of $3. The average target represents a potential upside of about 178% from its current price. That means analysts see nearly a tripling of value within the next year if things go according to plan. Given that the company's Phase 3 Artemis trial could produce major updates in the coming months, any positive data could act as a massive catalyst for the stock. Moving on to the second stock on our list, ARS Pharmaceuticals, trading under the ticker SPRY. With a market capitalization of $968.5 million, ARS Pharmaceuticals, also known as ARS Pharma, is a biotechnology company focused on developing treatments for severe allergic reactions, particularly anaphylaxis. The company's flagship product, Neffy, also referred to as -1 Argentine peso, has been creating a lot of buzz lately because it represents a true innovation in emergency medicine. neffy is the first and only FDA and EU-approved needle-free intranasal epinephrine spray designed to treat life-threatening allergic reactions caused by food, insect stings, medications, and more. As of now, let's look at their recent financials. In the second quarter of 2025, the company reported revenue of $15.7 million, surpassing expectations of $13.77 million. Earnings per share came in at minus 46 cents, which was in line with forecasts. While the company is not yet profitable, the revenue growth trajectory is very encouraging, particularly given that their flagship product is still in the early stages of commercialization. One of the most important highlights from the recent report is that U.S. net product revenue for neffy increased by a stunning 64% from the previous quarter. That kind of sequential growth shows strong adoption momentum among patients and physicians. Additionally, ARS ended the quarter with $240.1 million in cash and equivalents, giving them ample liquidity to support marketing, manufacturing, and future product expansion. With gross-to-net retention improving into the low 50% range, it's clear that the company is managing its commercialization strategy effectively and setting the stage for long-term growth. Wall Street analysts certainly see the potential. Based on the latest research, 5 Wall Street analysts have issued 12-month price targets for ARS Pharmaceuticals. The average price target stands at $31, with a high forecast of $40 and a low forecast of $25. That average target represents an incredible 200.68% upside from the current price of $10.31. When analysts across multiple institutions converge on such high targets, it usually means there's a strong consensus that the company's growth prospects are underappreciated by the market. Well, that concludes our list of 2 stocks that Wall Street believes can soar over 200%. Both Adverum Biotechnologies and ARS Pharmaceuticals are prime examples of high-risk, high-reward plays with strong fundamentals and huge potential upside. Remember, investing in biotech stocks requires patience and due diligence. But when you find companies with breakthrough technologies and strong analyst backing, the rewards can be extraordinary. If you enjoyed this deep dive and want more updates on the most promising biotech and penny stocks in the market, make sure to subscribe to the channel, hit that notification bell, and stay tuned for our next video. Because in a market full of noise, we'll always bring you the stocks that matter most.